In these deep, dark, depressing times of the Bitcoin cycle, it's important to remind ourselves where we are in the cycle. And I'm not talking specifically or only about the Bitcoin or crypto cycle. We're looking at the broader picture here, the economic cycle, the real estate cycle. There is still a lot of buzz going on around the world, no matter where we are in our Western developed countries, within the business cycle, and of course the stock markets as well. Today's video, we're going to look at how cryptos are continuing to purge amongst the macro cycle, the broader picture of prices continuing higher, what we can do to position ourselves for that next move to the upside. We're looking at those cryptos dropping and then trying to position ourselves to those leaders amongst what is happening in the broader picture. So we've got a big update to get through with you guys today. Hit that like button. We're getting close to 3,000 likes again. Thanks again for your support on the channel. And of course, to all of the degenerate jokes that I put into the videos. You guys really enjoyed yesterday's XRP turd jokes. See if we can throw a few more in today's video. Now, there is the free crypto and economic report coming out today. So less than 12 hours to go. Get on board with that if you haven't already. Plenty more updates on that free subscription as well. All right, guys, let's kick it off with the economic news that's out this week. This is the stuff that makes the markets volatile, but of course, it's only important on the day. That's the way I view it from my own analysis, and that's what I'm sharing with you guys. If you've been here on the journey for several years now, it's the same flipping thing every single time the CPI comes up, the interest rate announcements come up, the PPI comes up, the employment shit comes up. Now, there is going to be volatility because there's a lot of it this week. We've got CPI, we've got the interest rates decisions, and then of course employment, yada yada for the Aussies here, and PPI at the end of the week. But make no mistake, the markets are going to do what the markets do because we are still in a broader bull market. And for you guys following along at home, we are in the winner's curse phase of the cycle. We're seeing lots and lots of headlines of real estate prices skyrocketing around the globe. And most importantly for this cycle, it is based on the US. This is the country that leads the world at the moment and probably for the foreseeable future. If you like it or not, well, you're probably going to have to find another planet to live on because this is the world that we live in. House prices are continuing higher. Plenty of data we can go through, but I'm not going to bore you with every single piece of data when it comes to the real estate cycle. Just note that the prices are up, and yes, there's been a correction, but of course you've seen prices skyrocket, and with every typical move to the upside, and depending on how fast it is, you're going to get some sort of correction. Now, we're seeing those prices continue to move up again. You only have to look as far as the headlines, and this is for the cities that are desirable. The bigger cities, the cities that people want to go and move to, so don't try and compare it to some sort of random outskirts town that people have no reason to move to. You might love it, but we're talking about the broader economy here and the real estate cycle. The US interest rates have been on pause. Well, we had a jump in July 2023, and then it paused in September. So essentially, it's been at the same interest rate for 12 months. So we could say it's been at the same interest rate now for 11 months. That's a pretty good win, I think, in terms of understanding the cycle, understanding the interest rates, and how the media continues to get it wrong. And you too can beat the media and beat the typical analysts that you see online that are continuing to purge the fear in the markets at the worst times. You know, that was the bottom in 2022 and 2023, telling us how the market had to collapse. And of course, we now know from history that they were all completely wrong. So interest rates looking like they're continuing on pause. Even if we were to get a slight decrease at some point over the 2024, I think that might just fuel the fire even more, which is probably not the greatest for the housing market at the moment. Eventually, things are going to have to change. You will see cuts, but for now, it seems like cutting the interest rates would probably even just spur the prices on higher as we're in this winner's curse phase of the cycle. So following that, you get to your peak and then the collapse and major recession later in this decade. So onto the S&P 500, just looking at this particular signal, this one-off signal here. It's a year since the bull market was confirmed. It's been about a year since the S&P 500 confirmed a breakout to a new bull market, and that's referring to this particular signal, as we'll review in the data and what it means to the market from here. Similar one-year analogs preceded relatively weak returns in the months ahead. Returns were weaker when the analogs concluded during summer months. So the point here is that it's coming into the summer months for the US. Obviously, we're in June. You're getting a conclusion of these analogs here, and it's been a year in these highs. So this is all suggesting that there might be some slowdown with the returns over the coming weeks and potentially months. Relatively weak returns over these periods. You can see from the percentages, it's not a great return over the coming months. And the conclusion tells us, well, it is a one-off signal, but when you layer it across other signals, as we've looked at on the channel, then you can see that this might be a time where you're not going to see those significant gains like the market has had previously. So this all, I think, for at least from my analysis, falls into this particular type of cycle where we might see slightly higher highs, but possibly nothing like what we saw before. Of course, this can be invalidated, and then you'd start to see the market skyrocket away, which essentially still is within the real estate cycle, because overall, over 2024, my theory has not changed. We will see higher prices over 2024 compared to what we saw in 2023, meaning I don't think you're going to see the same prices as 2023 come up in 2024. So I'll draw some lines here for you. That is 2023. And I don't think for 2024, you're going to see prices fall back into this zone and consolidate again. Of course, I'm a guy on the internet. I could be wrong, but this is what my analysis has shown me, especially as we've burst out of previous consolidation, retest, and then a breakout, retest of that all-time high, another breakout. And you typically wouldn't see that fall back into this zone, consolidate again, and then take off again for that end of the cycle. I think we're going to be spending more time at these higher prices and then taking off into even higher prices before the end of the cycle. So that's pretty much a look at that particular one piece of data. Layered across the seasonal patterns as we're brought up to date in the last few videos. Slightly higher highs. You can see here on the brown line. You can see it on the blue line as well. So that's your aggregate cycle. The black line as well. You've got all election years. So you can see this black line in the background. Slightly higher highs. And then we get this sort of drop off just before the election at September, October, which is roughly end of Q3, early Q4. And then the end of the year is basically a big move to the upside. Now, I bring this up most videos because to me, this is like my Bible for the year. I haven't had a reason to not follow it. Things are still working as they should based on previous cycles. We go back decades upon decades upon decades to put this information together. And so far, it's basically been working out relatively well. Nothing is exact, of course. I think we all get that by now, but it's kept us on the right side of the market if we are invested for the long term. And this has been very, very good. Whereas the majority, like we saw in 2022 and 2023, were expecting another collapse. They're hoping for collapses. And now they're hoping for collapses even more so they can enter, because now everyone is bullish. Well, a lot of people are bullish. They're getting more of an idea that, well, this has been overbought. I need to get this correction so I can enter again, and then it can take off. So if a lot of people, at least that's what I've been seeing online, a lot of people are hoping for this so they can enter. I think it's unlikely going to happen that you would see some sort of significant correction past significant support levels that you can see here on the S&P 500. So far, this has been a pretty significant level. 49.60, and then the old all-time high at roughly 4,800 points. So that's my long-term support line. Here is my shorter-term support line at 49.60 to 5,000, because that's those previous higher lows. And this is my theory here so that we can all remain on track, especially if you're new to the channel. Hit the subscribe button. Don't miss out on any of the content, because this is a daily update looking at the broader picture and how the markets continue to progress. So the theory, seasonal trading range within a macro bull. And then we're looking for any sort of invalidations. The macro bull, well, surely everyone can see that now. We're in a pretty big uptrend. And again, you can go back to my videos and tweets. I was calling this in this section here. I'm not trying to call the exact low, but during consolidation, that's when I want to be contrarian to the rest of the market. And I think we did pretty well here on the channel to be contrarian to the rest of the market at key turning points. Anyway, moving on from that with the S&P 500, new highest daily close in history happened yesterday. Absolutely wild. I put on a line chart. This is today's bar, but you can see from yesterday, new highest daily close in history. NASDAQ, same thing, new highest daily close in history yesterday. And the day before was that all-time high as we discussed in yesterday's video. Now the Dow Jones, the laggards are lagging. It's not at a new all-time high yet. It's 50 or 71 days and 50 trading days from the previous all-time high. And again, here's another look at the laggards that are lagging. And this is the Russell 2000, so the smallest 2000 stocks. The lesson here is not to get into the laggards during a bull market. It's just a reminder to myself again, and hopefully you guys are also getting something from it. People do this in crypto all the time. We know the cryptos that they keep trying to buy up as it goes down, and the same thing happens in the stock markets. And this particular index will always show you the laggards because it's the bottom 2000. So if companies are getting strong in this, then they're going to move out of the 2000, hopefully get into the top 500, which is obviously the S&P 500. Therefore, the S&P 500 is the leader, and this is the lagger, because it just keeps picking up all of the smaller companies. I mean, it's not rocket science really, but a lot of even investment funds and hedge funds, they missed out on the top stocks here in the NASDAQ. You know, your NVIDIAs and Apple and Amazon, Facebook and all that sort of stuff. And they go and buy up the laggards. This is why the majority of people lose all the time, because they give money to investment funds rather than taking charge of their own investments, their own money, and learning, I think, at least, the basics to trading and investing. And so these companies get into these laggards because they missed out and they don't want to look like a fool, and they basically lose people's money. Now, if you don't want to be on that side, I highly suggest, and yes, of course, it is our trading and investing education, TIA Premium. Link is in the top of the video description. If you want to learn a little bit more about that, check out the link here at TIA. So this is the free crypto and economic report, tiacrypto.com/subscribe. You'll get an email where you can go and join the free Discord. Check out the TIA reviews here from our members in Discord, how they're trading, what they're learning, how they're implementing this for their own trading plans, their own investment plans. And it's for the longer term as well. You don't have to be in front of your computer day to day trying to trade every single pip out of the market. And also we get into commodities, economic cycles, our real estate cycle, as well as we continue to see this around the globe. Discord that you can get a link to with the video description here. And of course, the premium community over there as well, if you want to take that next step. Now that leads us over to cryptocurrencies and Bitcoin and the purging going on that we can still see with altcoins continuing to slide against their BTC values. And of course, we want to look at some of the stronger stuff too. Now, this is the Crypto Fear and Greed Index. I can't work out why we are still above greed, and there's been many calls to say that this index is broken and that the terms that they're using here, or the data sources, aren't necessarily valid anymore. But for now, I'm continuing to keep this in my toolbox, and I'll continue to watch it over this cycle. The main reason here why it could still be in greed is that Bitcoin hasn't broken down, and it's still within a trading range above our key support levels, one being around that 65K. You know, we're looking at 64 to 65, which is the next 50%. And of course, still above 67. And for now, at least, has found support at 69 and continues to hold above $69,000. So I think while Bitcoin remains in the strong half of many of the 50% tools, then we probably won't see extreme fear or any sort of fear come up on the fear and greed index, even though this is the crypto fear and greed index. And you can see it here on the longer term chart. Take it out to a year, and it really hasn't gone anywhere. It's basically just been in this greed section for many weeks now. So that's a look at the fear and greed. I think if we were to see Bitcoin have a bit of a flash dump anywhere here, even to the 50% levels, that's obviously going to adjust this market sentiment reading, but we'll come back to that in future videos. For now, let's have a look at the Bitcoin ETF flows, and they've died off over the last couple of days. Of course, this data is a few days delayed, as you only get to see it, a couple of business days after the last business trading day. So the latest data we got here is the 7th of June, but an interesting one to note here, a reminder to myself and hopefully to you guys as well, at those extreme peaks, look at that one there, June 4th, 12,600 daily ETF flows. That was the fourth highest ETF flows. I'm getting to something important here. Stay with me. 13,000, 13,000.7, 13,000.6, and what do you got here? 12.1. So yeah, essentially this is around the fourth highest flow. Check out where Bitcoin was. We are on this chart here. Fourth highest ETF inflow was that day there. Now these people came in towards the end of that move, and then you got this nice quick dump here to scare out the weekends. There's the dump here there on the 7th. Look at that. So these people who had bought on this day are either at a loss or at a break even. Now this is something that Michael put together on his channel, so I suggest going to follow him as well. There is a link to his YouTube channel and check out his daily videos. It goes into more short-term crypto trading updates with the strong alts, the weak alts, things you can short and long as well. I would suggest going to follow him, like his content, let him know that his big brother Jason sent you over to his channel over there. But essentially, I think that was a fantastic pickup to have a look at when the excitement from the masses come in at these peaks. Biggest day that we've seen in the last sort of 5-ish months, and what happens to them? They get dumped on. Again, it's the same thing. So as we get close to some sort of next big major move to the upside for Bitcoin and cryptos, be on the lookout for any sort of euphoria, any sort of peak type of jargon that you hear floating around in cryptocurrency land, where they're just saying it can never go down. Essentially, the feel is that these markets can never go down and you're getting out too early. Just know that it happens every single time, and write that down in your trading journals, as we have done with our 3-day down signal. Yep, we're looking at it again because we're looking at a time frame of about 4 to 6 months underneath the old all-time high. That is why. So we are into our 89th day. We get to tomorrow. It doesn't seem like we're going to get a new all-time high today. So, let's see what happens. We get to tomorrow. It's going to be 3 months. And then we're only a month short of getting of being underneath the old all-time high. So plenty of time to go. It's obvious that we're going to get to 3 months underneath the old all-time high now, but it wasn't obvious back in March. That's the difficulty here, is trying to forecast based on probabilities. We had plenty of those to get through in the market back then with what the market is going to look like over those coming months. And what we wanted to do over these coming months is start to position ourselves, or at least obviously that's my idea, is to position myself into altcoins that are looking stronger versus weaker. Get out of some of the weak ones, position myself into some of the stronger ones. That's precisely what we want to look at next. On to the crypto total market cap. So this is the chart that you guys can access, total 3. And we're still seeing higher lows forming, even though the last couple of days you've seen cryptos, altcoins, start to bleed out. And over the last 24 hours, there's a lot of these that started to bleed out, obviously to the downside, and started to lose value against BTC. Now, as long as they remain above 50% and above their higher lows, I think they've got a good potential to move higher when that next alt season comes. And some people are short-term minded. In that case, go and follow Michael's channel. You've got daily or intraday trades over there. Whereas for me, I'm looking out towards the end of 2024. So prior to this month, that was looking 6 to 9 months out, and into 2025. So I've got a longer term outlook for these altcoins. So even though we've seen some altcoins move in the last month or two, and they're starting to correct now, I'm still looking further out for this next altcoin season. And why I'm doing that is based on the stealth moves of the altcoin market in previous cycles. We've got a peak, the COVID correction, and then the stealth move back to the upside. Of course, I think that happened because of such significant or severe corrections. You're going to see these stealthier moves climb rather than go sideways like what we're seeing now. And once it's had climbed, then you see the stealth move go sideways. So you've got this trading range. So these timeframes, they're 184 days to this peak, from that peak, so about 6 months, underneath this top to where it broke out roughly there in July 2020. It's about 160 odd days. So quick maths, about 5-ish, just over 5 months underneath that top while it went through its stealth accumulation, volume dropped off, range average true range dropped off, meaning the bars are getting smaller, meaning there's less interest in the market, meaning the masses aren't here. The normies haven't entered their meme coin positions yet, but they will when it gets to that sort of thing. And you see this average true range skyrocket, you see the volumes start to go up, and then towards those peaks, which is where you really need to start to get a little bit scared as opposed to enjoy the party, is the signals of larger bars and more volume at those peaks and the market not going higher. You can see that you get these big volumes right there at a peak bar and then a reversal. Sure, it went higher, but it didn't really go that much higher. So the worst thing you can do after that is remain into positions or at least not take some sort of profits. I think there's still plenty of time to get to that in this cycle. So let's just focus on the stealth indicators here as cryptos continue to purge out. You can see now, and look at those winners. Solana, this is a winning looking chart at the moment. It's always, well, for me, it's always important to have an invalidation level. My invalidation level is down here. It hasn't changed, still 0.0018. And this is why I write here, the rather not zone. I'd rather not see Solana drop below this against BTC, but this would be the danger zone back here, 0.0013. So any sort of movement underneath those levels, I probably have to get out of my positions and look for something else that has some more strength to the upside, or at least some more free ground above those previous highs. So that's a better looking chart than, I mean, we can pick on it again, but I'll just point at it here this time as opposed to opening up the chart. You guys enjoyed those turd jokes a little too much, but so did I. But that looks very normal compared to what Render has done previously. So you can see that did 100 days, 99 days to the downside, then took a few more weeks for it to get going again. It was putting in higher lows along that journey, and the previous move to the downside was about 50 days. But this was earlier in 2023 when there was a lot of consolidation that had already occurred and not such a big long run that had lasted, let's have a look, from this top back to the low. You've got to move there about 639 days. So, you know, short of a few months short there of 2 years to the upside. So I wouldn't be surprised if Render versus BTC takes some time to consolidate, maybe even breaks this diagonal line as it has done in the past, take even longer to consolidate, and then start to work its way higher when the energy and excitement comes back into the altcoin space. So I think it's important to have a look at a few different types of charts that could still remain in a strong position. And in the case of Render, underneath the 50% level wouldn't be the end of the world for this one. I'd be looking at more significant support and resistance zones that it had done in previous moves to the upside. So that's where I'd be looking for any sort of breakdowns. If it gets back underneath very significant levels that had bounced from already, then I'd probably say, oh, this is another dead one, kind of like what happened to Link. So that's one look at strong at the moment chart, Render as well. And then to our meme coins, we're looking at another chart here. There's your higher low that I talked about in April. So 13th of April was the low, higher low there on the 19th, and then strong above your 50%. And it's still above the previous old all-time highs. However, do note that it has gone on some significant runs. So again, like Render, if it's gone on these big long moves, I wouldn't be surprised if it needed more time to cool off, consolidate, and go into one of these zones where you get smaller ranges on the bars because you want to see the interest dissipate. The smart money buys up at those points, and then you start to see the market pump again. So you start to see the volume drop off. You'll see the same sort of volume profiles and bar patterns where it just basically drops off, and then out of nowhere, you start to see it climb, and then the big breakouts occur. So this one here, I think, is probably got some more time to consolidate. We'll continue to follow up here on the channel. Hit the like button. Let's go for 3,000 today. And of course, the free crypto and economic report coming your way in the next 12 or less than 12 hours. I'll see you guys back here at the next video. Thanks again for your support on the channel and your enjoyment of my dad jokes and wisdom. Until next time, take care and peace out.